It is useful to keep in mind that this paper is entitled Management Information, and that information, good information, relevant information, lies at the core of effective management of a business. To make information meaningful, try following the television news, for example, the business news when there is discussion of a company's performance, for example. And ask yourself this: when they talk about a company's performance, are they talking about its growth in sales or profit in comparison with the company's competitors? Or are they talking about how the sales and the profits have progressed over the previous year? Or something you're less likely to see, of course, is whether the company's actual performance has been better or worse than what was budgeted. Because the budget is an internal document which is not available for public consumption as to what a company is planning to achieve in terms of its business activities over a period. Another meaningful comparison would be in the investment world, for example. A company's profits compared to the expectations of the investment community, Wall Street, for example, and whether those expectations were exceeded or not achieved. It may strike you as curious, for example, to hear about a company that made a loss in a given year and their share price went up. Now, how could that be? Well, it's a process of evaluating relevant information. Presumably, the market was expecting a much bigger loss than was actually achieved, and therefore the company's results were actually less bad than the market had experienced, that it had expected, and therefore the share price went up. So, as you can see, everything really has to be understood in context. Here's a useful definition of a budget. Everybody does budgets, but you have to stop and think, what is a budget actually? Well, it's a quantitative plan, right? It's got lots of numbers in it, and it addresses the future. Okay, the budget can be used for a variety of purposes. Clearly, it's setting performance targets for what the business has to achieve, and therefore we would expect it to be oftentimes used as a basis for evaluating the business performance of individuals, employees, and departments in the company. Of course, while you're operating a budget, you're looking periodically at the budget and how things are going, so you are, in a way, you're controlling activities or monitoring things against budget. We hope that the budget is considered to be challenging for employees and that they are inspired to make budget, particularly if there is a bonus or some kind of compensation scheme related to the performance, and therefore the budget can be designed to also provide motivation to employees. And perhaps most basically, a budget, once it's approved and distributed to the staff, it effectively communicates objectives. How much of what are we going to produce and sell to whom? It really is quite a specific plan as to quantities and prices and so on that are planned for the coming period. Let's talk a bit about forecasting and budgeting. Now, the budgeting process in a company usually is very structured and sometimes quite complex, even complicated. It has to start from an understanding of what the company wants to achieve in terms of its objectives and strategies, and then the budget is a way of being able to clearly articulate and quantify what has to be done in order to implement the strategy. We have something called the master budget. The master budget is pulling together the various sub-budgets that exist. One can think of this as like a hierarchy of budgets where you have numerous operating budgets and you have financial budgets, and the two together add up to the master budget of the business. Master budget usually follows a periodic period of preparation, annual frequency, and clearly it should give expression to a company's objectives. Let's talk about operating budgets now, just in terms of what they seek to achieve. We can see here they vary from sales budgets to production budgets, materials usage budgets, material purchases, and so on. In fact, this is pretty much everything that's related to the operations of a company, hence the term operating budget. If we were to imagine who the people are that are operating each of these different budgets and preparing them, of course, a sales budget would be people who are involved clearly in sales. So salespeople or relationship managers in banks who want to provide services to their clients, they need to think about what their sales budget is going to be. In a factory, the production budget is very important. There'd be a fellow, usually a person who is in charge of production. Let's call him or her the production manager. And of course, they have to know how much to produce in a given year, whether they're going to produce 1 million blue pencils or 2 million red pencils. And of course, their production budget is going to be tied to what the company plans to sell. So it's a good idea that the sales manager is talking to the production manager when these budgets are being put together. Then there's someone else who is going to be in charge of purchasing. And the purchasing manager is going to talk to the production manager, who is going to put together a budget which quantifies the types of materials that have to be used in production, and therefore the purchasing manager will know what he has to buy, because he goes out there to look for the best prices in the market, looking for quantity discounts, and so on. Then we have, of course, HR, human resources people. They have to be involved in understanding what goes into the direct and contribute to the direct labor budget, because if we're going to produce, we need to have people who are properly qualified and proper number of people who are going to be involved in the production process, and therefore HR has to coordinate with the production manager as to the head count and qualification levels of the employees, and if necessary go out and recruit people or make sure that people are properly trained to be able to perform the budgeted production which is planned at the company. Then there's a budget made for overheads. This is something that doesn't happen by chance. We discussed in an earlier session what the overheads were all about. Then of course there's selling and distribution budget, so we can come back here to the salespeople, and they would be involved as well in terms of what the costs are connected to making sales. But of course distribution can mean, for example, somebody who is in logistics and has to run or plan for a fleet of trucks that will be able to move the goods and so on. All of this has to be planned in advance based on certain operating assumptions. And then of course the administrative expenses budget, that's the overhead, the administration, the finance, and so on of the company. All of these things have to be planned. So you can see here that these are all areas of responsibility that these people have. And most important, the various budgets that are put together have to be consistent one with the other. Otherwise, not everybody will be pulling in the same direction. The financial budget sequence will involve a capital budget. This is the spending necessary for equipment. We can also refer to this as being capital expenditures, or simply CapEx. Of course, a cash budget has to be put together to make sure that the company is able to anticipate its cash needs and have enough cash on hand to meet its obligations. And then, of course, balance sheet and cash flow statements need to be put together as part of the overall process, and of course a profit and loss statement as well. In budgeting, it's important to think about a principal budget factor. What are the limitations that will impose themselves on the preparation of the budget from the standpoint of ability to be implemented? And these are not just financial implications or financial influences. It could also be, for example, that there is a lack of suitably skilled salespeople able to go out there and find the markets, and therefore the sales budget in terms of volume has to be consistent with the availability and of people who will actually go out and sell. So keep in mind, this is really a qualitative aspect to imagine what the main limitations are going to be when doing a budget. For example, in the automobile business, the total market demand is an important starting point to understand that one doesn't produce so many cars that they actually exceed the total amount of cars that people want to buy. There has to be some correspondence or balance that is found with regard to what is produced, how much is produced, and what the demand will be for such products.